Good morning. Welcome to Stock Market Today. It is Friday, January 22nd, 2021, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider in your inbox every trading day before the market opens. So U.S. equities were mixed in Thursday's trading. NASDAQ finished at a new record as big cap growth led the charge again yesterday. Tech, discretionary, and comm services were the only sectors higher. FanMag names actually breaking out. Treasuries were unchanged to weaker at the long end of the curve. The dollar was down against the euro and sterling, but was little changed against the yen. Gold was flat on the day. WTI crude settled down 30 basis points. And as we get to the desk on a Friday morning, futures are under pressure, down about 60 basis points. However, U.S. equities are still on track for a solid week of gains led by large growth. Asian markets were lower overnight, with Hong Kong down over 1.5%. European markets are under pressure as well. Treasuries are mostly stronger. The dollar is stronger against the yen, but weaker on the euro cross. Gold is up 40 basis points. Crude oil is down 2.3%. To kick us off on Friday morning trading, where we have to ask the question, are the Qs reasserting? And we'll take a look at this a little bit later on in more detail. But, for the most part, the trends here remain the same. What I see this week is a little bit of the larger cap growth names taking the ball and running with it, while the value names take a little bit of a breather. Doesn't do much to change the structure of the trends here for the market. Let's think about support for the S&P in the 360 to 370 range. That's SPY. And then key level being 340 below that. Above 340, upside potential to 413 still. Qs, 260 is key. 300 is important in the near term. I feel like we're putting that in the rearview mirror. Taking a look at the Qs here as they traded at a new all-time high yesterday. IWM 190 in the near term, 160 to 170 are key. And the trend remains to the upside. Can you make the case that we're a little bit extended here in the near term? Yes, actually you can. Over the past couple of weeks in our notes to clients, we've been highlighting the overbought nature of the major markets, except for the Qs, right? So we've been looking at SPYs, we've been looking at IWM, and they've been overbought. And we've talked about what that means in various contexts with our clients. To me, you respect the trend, but recognize where you are within the context of that trend. So the way I like to think about overbought and an uptrend is that you just kind of calibrate your aggression levels a little bit differently. I think it makes sense to be aggressive in adding new ideas when you're oversold within the context of an uptrend. Overbought within the context of an uptrend is a great time to be looking for potential new ideas, to be making sure your risk management process is sound and firmly in place, and otherwise kind of just enjoying the trend to the upside in your names, ETFs, markets, etc. At least that's how I think about it. You may have a different view. However, that's the way I see it. Not a ton to say differently about what's going on here for the major market averages. As we turn to our market in a minute, what are we writing about today? Well, we had a mixed day. Growth did lead while value took a rest. FanMag reasserting to the upside. In my note today, we talk about FanMag stocks breaking out, right? I have a kind of a price-weighted index of these 6 names, and they've broken out of the consolidation to the upside. So we're starting to ask the question, are we reasserting that uptrend? Small caps and semis are extended on a relative basis, or again, arguing for recalibrating your aggression levels. In my note, we talk about an ETF called PIC. It's another arrow in the global growth quiver. And as I said, futures do point to a lower open here today. Now, as we look at the major indices, from a power bar perspective, it's still solid to the bullish side. 73 bulls to bears for the Dow, which was relatively flat yesterday. S&P also relatively flat, 135 to 55 bulls to bears there. NASDAQ, your large cap growth outperformance, 24 to 14 bulls to bears. Small caps were your laggard on the day, down 88 basis points. They deserve a break, I guess. 824 to 105 bulls to bears. Bonds down tick, sending yields higher. Tech, your best sector on the day. Tech XLK up about 1.3% with a solid power bar ratio, 22 bulls to 5 bears. So, according to the power bars, small cap stocks, large cap stocks are strongly bullish. Maybe you make the case we're a little extended here in the near term. Futures under pressure this morning, but depending on your time frame, the bigger picture trend remains to the upside. Now, let's hit our stock of the day. Amadeus, AMED, with a bullish rating here at Chaikin Analytics. They did lose 52 basis points yesterday to close at 302.90. Strong trend above the rising long-term trend line and a strong industry group in the healthcare provider space. Rating recently turned bullish. Solid outperformance. Overbought, oversold indicator rounding up from an oversold condition with bullish money flow. That looks like a pretty compelling setup to me on a stock that's kind of consolidating here above support at the 280 level. I think if you're above 280, this looks like a pretty compelling idea. So if you're looking for ideas, this is certainly one to have on the radar screen. Again, thinking about how to calibrate your regression levels, where this fits into your portfolio, your process, your risk profile, et cetera. But that is an uptrend. And this is a stock that is oversold within the context of that uptrend, worth adding at least at a minimum to a watch list. Let's hit our sector tracker now. The movement of the major sectors over the last 5 days. Comms and tech jumped to the top of the list. For comms, we've seen some breakouts here. We've seen Netflix power higher on the heels of their earnings report. We've seen Google break out. We've seen Apple's in the tech space. So reasserting a little bit to the upside. Actually traded at a 52-week high yesterday before fading throughout the afternoon. Real estate, discretionary, healthcare, and Utes round out the groups that are higher over the past 5 days of trading. And you have your staples, industrials, materials, fins, and energy at the bottom of the list. Energy giving some back, a lot of puts and takes there. Energy's had a nice rally. Maybe the inauguration and the change of administration has become a bit of a sell the news event in the near term. There was some commentary yesterday, which we'll touch on when we look at stocks. But first, our industry in focus, semiconductor services, past 6 months, been outperforming the S&P by close to 38%. Power bar ratio, which looks at future potential, is very strong. 11 bulls for 1 bear. It's currently ranked number 9 of 21 subsectors, having moved down 1 slot over the past week. Now, Intel's in that group. They reported last night. Stock popped, actually. The earnings report leaked early and then faded. Micron has been trading well since their report. Smart Global, SGH, also in here with a very bullish rating. All three are holdings of a fund that, we can't really say too much bad about this other than it's extended. XSD has a bullish rating, 11-1 bulls to bears, up 1.7% yesterday in a mixed tape. Trend is strong, but again, just extended. In the near term, you can see the fund is trading above its upper volatility band. Upper volatility band is what I'm trying to say there. While at the same time, the fund is overbought. Money flow bullish, solid outperformance. Again, just kind of thinking through what's happening here in the markets in the near term. We are overbought within the context of an uptrend. The leading themes within the market are overbought within the context of that uptrend. So, something to be aware of in the near term. Probably a good opportunity to make sure your lists are in order, your stops are in place, your risk management is tight for you, right? Meaning it's in place and well structured. So that's kind of how I'm thinking about things here on a Friday morning that starts out with the futures under pressure. Let's hit what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. PCAR up 10.5%, traded at a 52-week high yesterday. Didn't see a ton of company-specific news there. Borg Warner BWA up 6.65% after being added to the short-term buy list at Deutsche Bank. Moving that stock. Intel, again, their earnings report was released early during market hours, caused the stock to pop initially, and has subsequently been fading and is trading lower here this morning. Ford caught an upgrade today at JP Morgan after being higher by 6% yesterday. And Cummins, I didn't see anything company specific to drive trading in that name. Loser side of the board has a bit of a theme to it. Some commentary about federal drilling permits with the new administration in place, leading to a little bit of a sell the news event for some of these energy names that have run. EOG down 8.5%, Devon down close to 8%, and Oxy down about 6.43%. Oxy kind of down with energy, and that was enough to kind of overwhelm an upgrade from Jefferies on Oxy, down 6.43%. United Airlines reported earnings. That stock lower by 5.75%, and Discover, bullish stock here, but down 5.6% on the heels of their earnings report, kicking off the reporting season for the credit card names within the space. Now, again, we are at that interesting juncture where macro meets micro, and investor focus turns to earnings. We're going to be in this condition for a few weeks. So obviously want to pay attention to what companies have to say, obviously, for, kind of outlooks for the quarter, for the year 2021, see how management teams are sizing their opportunities and the general landscape. So, we've kind of went from no company specific news to we're going to be getting a lot of company specific news in the weeks ahead. Let's talk about the Qs. Leading the charge this week, closed at a 52-week high yesterday, trending higher above the 50 and 200-day moving averages. Now, notice that while everybody was while the big mega cap names were under pressure, and kind of consolidating, the Qs actually were able to grind higher, and they never became oversold. In fact, this fund has not been oversold since last March, right? Since the beginnings of the COVID downturn, right? Nice solid uptrend ever since, bit of a consolidation, and now working topside once again. A little bit of room to an overbought condition while Chaikin money flow is bullish. So we've been writing about and talking a lot about having that balanced approach when it comes to looking at opportunities within the equity market, and where you could easily get away with being overweight and highly leveraged towards large cap growth through much of 2018 and 19 and the first quarter of 20. That doesn't appear to be the case any longer. There's a lot more opportunity out there. I think it's a function of breadth broadening out, which we've been talking about for a few weeks. I think it's a function of increasing risk appetite on the part of investors. So it's kind of interesting. I've gotten some questions from folks who just kind of almost feel like overwhelmed with setups from time to time, and potential opportunities out there. And yeah, listen, that can happen. And I think it comes down to, sticking to the process that works best for you and taking kind of the fat pitches that fit within your process. I think it's easy to get overwhelmed. It's easy to kind of look at every headline, every pitch, every idea, and think you have to jump at it. Realistically, I struggle with this also. I talk to somebody and they throw a good idea my way, or what seems like a good idea that they have high conviction on. Sure, I want to take a look at it. Sure, there's a little bit of a kind of a FOMO that builds up inside of you. But I think it's important to kind of get that under control, stick to the ideas that work best for you, your time frame, right? Where things fit within your portfolio, and just kind of stay the course for your particular process. Semi strong, but extended. We've looked at this chart in the past. SMH relative to SPY, right? Kind of a semi day. Solid uptrend, right? We can't argue with it. Accelerating to the upside, we can't argue with that, and that kind of preceded new highs for the major markets. And just in the near term, a little bit of extension here. We're about 23% above a rising 200-day moving average. Again, calibrating aggression levels, I think is a great phrase for it. This ratio is closer to overbought than to oversold obviously within the context of this trend. But it really, look, we're looking at 2 years of data here, or about a year and a half of data here, and we just no oversold conditions, right? So a solid trend to the upside, just kind of watching it here in the near term and adjusting aggression levels accordingly. And then, it's kind of same goes for the small caps. Take a look at IWM on a relative basis. IWM been a solid outperformer above the 200-day moving average. Can you make the case that we're stretched a little bit here in the near term? Absolutely. Can you see a small negative divergence here in the near term? Absolutely. But however, momentum remains to the upside. Kind of haven't been oversold since the depths of the COVID downturn. IWM on an absolute basis, just a nice solid uptrend, something we've been talking about. We've been highlighting the key levels for that ETF for the past few weeks here. So I think the case is, or the story is, overbought within the context of an uptrend, opens the door for taking a breather. Absolutely. But the bigger picture trends remain firmly in place. So that's going to wrap us up for this week. Head over to chaikinanalytics.com/test drive, where you can sign up for a free 14-day trial. You get the note every day that I'm talking, where I get a lot of the content that I talk about here on the show. Our note every Sunday that gets you squared away and set up for the week. So head over there, chaikinanalytics.com/test drive to sign up for that trial. Otherwise, be well, be safe. Have a great weekend. I'll be back with you Monday.